Dogecoin came down and hit my limit order sitting at 0.156 yesterday. Not only that, but we were actually bouncing right at that level. Let's go ahead and zoom in and just take a look at this real quick, but it's because it's kind of funny. We came down right here. We didn't hit this one. I was so close to hitting that limit order on that first time, but we came down to around 0.15616. My limit order was sitting at 0.156 flat. We got a nice bounce to the upside. Let's see how much was that from that right there. That was around 3%. We came back down. We got resistance. We were basically looking at a trend line, something like that. We broke that going to the downside, and then we came back down and hit that Fibonacci retracement level again, and we actually dipped a little bit below it, but we hit 156, got a bounce to the upside. This one was sitting at around, from 160, 156.156. This one's around 1.8%, not much. Got a nice little trend like that, broke that going to the downside. Then we came back down, hit it again. We actually dipped quite below it. We actually came all the way down to 0.1518 approximately, and we got a bounce from there. That was a nice move as well. If you caught that, that was pretty good. But we could have even just hit that 0.156, and from 0.156 to that top right there is around 3.7%. We had another little trend line, something like that. Broke that going to the downside, signal that it was going to the downside. We came back down, hit that Fibonacci retracement level again. This is exactly why I like watching the Fibonacci retracement levels. And this is where I got that level from in general before it came down and hit it. Hit that again, got a sick bounce to the upside all the way up to dot 1.7081. This is on the Coinbase chart, and actually it's kind of funny because when you look at the Binance chart hit this one first shot at 156. It went down and perfectly hit it. We can jump to that chart in a second, but we jumped all the way up here. Let's see what that one was. Let's see if you hit, because you hit it. Let's see, 156. It like perfectly touched it right here, didn't it? Yes. This one like perfectly touched 156. It went down to maybe like 0.15599 or something like that. But it was like, that was like perfectly 156. Then it got that huge bounce to the upside. Let's see how much that bounce was from 166 to there. That's around 9.5%. Then I wasn't watching any of this, by the way. I wasn't trading on any of this, but the trades were there. And if you're watching the trends, definitely. So we had this big run up. You would maybe look at the top and then look at the bottom, maybe something like that. And then I guess you could even argue something like that, but I would be kind of looking at the bodies a little bit more. Even that first one kind of pushing down, it'd be like a signal. If you bought right here and sold right here, even just at that signal, that's around 5.24%. Then guess what we did again? Came back down, hit 156 Fibonacci retracement level again. After that, it's been a slow crawl to the upside. Where was I at? This last bounce right here, we came up. We got a little run right there, and then, is that what I was looking at? Yeah, we got a little run right there, didn't come down and hit it again, and then ever since then it's just been crawling to the upside. And right now what I was looking at, let's go back to like the 5 minute. I'm on the 1 minute time frame right now, but let's go to the 5 minute. What I'm kind of looking at, we had a trend line going something like this. It looks like we broke it right here. Could be a sign of weakness, but we had a bottom right here, and then we started trending up again. It's like I was saying, or like I say, we watch the top, and then we watch the bottom. So we got a bounce right there, and it looks like we're on another uptrend like this. Let's see how far we could ride this going to the uptrend. And we're on the 5 minute time frame. So let's go ahead and go to the 1 hour time frame. I hope I talk about everything in this that I wanted to in this video, because I have been thinking about stuff and then I won't talk about it. But okay, so in yesterday's video we were watching, let's just go back in time a little. Let's delete some of this stuff right here just so we can kind of talk about what happened yesterday. Because I felt it like it was a bull flag. It seemed like one. We had declining volume up to, like, we started here, and then it ended here as far as the volume, that declining volume, and then we got a pump to the upside. It was a fake out. We did close that candle on the hourly time frame. We did close that candle above it, to be fair, and then we got a dump to the downside. Right after I made that video, it pumped up and then it started to dump down. So like it was kind of, I don't know, I felt bad. Definitely don't bet the farm on any of these videos, number one. But so okay, so we got a dump to the downside, but then that's when we started hitting that Fibonacci retracement levels. And guess what? Look at where we are right now. We're right back pretty much to where we started. Let's see, where did we start? Yesterday we were somewhere in here. I mean, we're like right around that same area. You know what I mean? Except this time, instead of not having that limit order filled, we filled that limit order. And depending on if you traded on this, there was a lot of trading opportunity in just that little time span. I wasn't watching the charts last night, but there was a lot of trading opportunity. And though I guess my strategy would be, okay, so we hit this Fibonacci retracement level. Okay, so great. I think now we want to shoot for this one, though. It'd be better to hit this one than these little ones. I mean, those ones, if we get a bunch of these ones, it'll add up to this one. Let's see. Okay, so we're at .156. If we go all the way to .17335, which is the previous top over here, it'd be 11%, which is very possible that that's, you know what I mean? 11% is a nice run if you caught this one, which, I mean, a lot of people probably did. So, yeah, let's go to the 4-hour time frame. Yeah, so even though we didn't, okay, and that's the other thing about like flags and stuff like that. We have a flag, we have consolidation, and I talked about this on yesterday's video. We have this bottom right here, and if we break that bottom going to the downside, that's a signal that, you know, we're going down. The other thing, okay, this is what I wanted to mention though, is the top. We didn't necessarily break that top, and I talked about it yesterday, is like, I like drawing like almost a horizontal line, as opposed to, I was waiting for it to break this line, let's say. I wanted it to break this line before I was really confident on that bull flag pattern target, let's say. I think that's kind of, like, now that we're seeing it, I think that's kind of a thing that is, I think would be a good strategy, should I say. So yeah, we broke that. Let's see. Okay, so now let's talk about this little downtrend right here, because right now we are technically trending down, kind of. Okay, so we're getting lower highs right here, right? So technically that's trending down. Let's go ahead and, when I was looking at this though, okay, so basically we can get rid of the bull flag though. I don't think we need that. We're basically just going to concentrate, because we basically broke that. We're basically going to concentrate on the 4-hour time frame right now. Let's go ahead and, so we broke above this. We faked out above it, and then we got pushed down. So let's go ahead and, since we're on the 4-hour, let's go ahead and adjust this. We'll use this little, that little line right there, and let's go ahead and drag something like this, something like that. Like I said, we're on the 4-hour time frame right now. I think if we can break this trend line going to the upside, that might be a nice little move right there. At the same time though, I'm kind of wondering about that Fibonacci retracement. The other thing that I was kind of looking at, let's go to the daily now. Okay, so like in yesterday's video, I was saying that I wanted us to stay above this, and I'm also, okay, in the comments, maybe you guys are more familiar with inverse head and shoulders or head and shoulders patterning in general. Is this common? Can you answer this? Is this common when we get, and you maybe agree or disagree that it's an inverse head and shoulders to begin with, but we have a shoulder and then we have a head, and then we have a shoulder. We broke that going to the upside. Is it common for us to come break through this, break down, and then break above that? You know what I mean? Because I would have thought that we don't want to break this trend line. Right now we are back above it, and that was another point that I forgot to make in yesterday's video, is if we would have just wicked down, and that's what I was really hoping for, honestly, is if we could have just wicked down and stayed this candle above this trend line, and then today get that other green candle and push to the upside, but we broke it. So I'm kind of wondering if this pattern is still intact because we broke that right there. So yeah, which brings me to my next point, is we have resistance right here, resistance right here. Are we looking at, since we're not looking at this pattern too much anymore, if that's the case, then are we looking at something like this, which is a rising wedge? Okay, so rising wedges aren't always going to be bearish, but most of the time they are. It might not be though. In a bull market, then they sometimes will, wreck the bears, should I say. So okay, so we have resistance, resistance, support, support. We're basically in a rising wedge. If we break this going to the downside, if we break this trend line going to the downside, then I think we would start looking at the next Fibonacci retracement, which also lines up with this bottom, which is around 13892. And then if we continue to go down, then the bottom, which is technically the target for a rising wedge right down here, something like that. Maybe the body's at 12957. I don't want to go down there, but that's what this pattern that's like the textbook, you know what I mean? Maybe even right here, that would be like the middle ground, I guess, would be around 13892. But like I said, in a bull market, sometimes it'll wreck the bears because it's not always 100%. Nothing is in trading. So what we can do is use this as a channel pattern. And if we break to the upside, instead of just dragging to the previous bottoms, we're using the top to the bottom of this pattern, something like that. And then we're going to drag this to the breakout. Once we do break, let's say we break out like right here at that Fibonacci retracement level, because if we break this Fibonacci retracement level, then we could start getting more bullish on the next one. And my target was pretty much somewhere up here, or it was at the red one, the red 23% at 1945 approximately. So yeah, like let's say, which this target even takes us a little higher. So let's say we drag from the top to the bottom, we drag this to the breakout. Let's say it breaks out at the Fibonacci retracement level, because if it's going to break out there, then it has a chance to go higher. So that would give us a target of around 20351, which is a little higher than this previous resistance, but right around that area, and same area that I've been kind of looking at for a long time. Not guaranteed to go bullish, and right after the video, of course, it's going to probably dump or whatever, but I'm just kidding. I don't know. But yeah, no, it kind of looks like a rising wedge. Okay, so let's see. Remember everything that you want to talk about. Let's go to the weekly time frame right now. Okay, so this is another thing that I've wanted to talk about for a couple days, and I forgot to talk about. Let's look at the daily real quick. Okay, the weekly 9 moving average. Which chart are we on? We're on Coinbase. Let me go to the Binance chart real quick. Okay, I'm going to delete everything. Delete. Okay, so we're looking at the weekly time frame Coinbase Binance chart, and we have the 9 moving average right here. I like watching the 9 moving average. In general, when we're on top of it, when we're above it, then we get support. It's likely. I mean, it's not always the case, but it's more likely that we're going to get support on it, bounce to the upside, and then we break to the downside. That's when the bear trend starts, and we're getting like kind of resistance. We're kind of kept down, you know what I mean? And then we break above it, then we can get some support again. Right here, broke below it, getting resistance, kind of keeping us down a little bit. Sometimes it even like pushes us lower. But right now, my point is if you look at this 9 moving average, like I was saying, when we're on top of it, it's good. When we're below it, it's bad. Right now we're below it, but it looks like we're testing it, and it looks like we did break it. I'm wondering if we're going to break through it and then stay above it. Once we do, then maybe we can start this bull run action again. Something like this, green candles on the weekly, you know what I mean? Instead of, we've been getting some red candles for a while. It's been a little mini bear market, but I think we get those kind of things. We can't run up forever, and we had a nice little run up here. Let's see, what was the run up from this little bottom right here? We had a bunch of green candles. Let's say from that weekly 9 moving average all the way to the top, something around 170%. You know what I mean? We can't go to 1,000,000. Well, 100%, 70% is very good. We came back down, get these nice little drops in crypto. Let's see, from the top to the bottom, around 47%. Actually very kind of healthy. Let's see, now maybe we can get that next jump up to like another 100% or whatever it is. We did 170. Let's see if we get like, I don't know. What is, So the tops of this one's around 33%, but I think around like the next previous resistance around here, that's around 70%, or the one after that is around. Shoot, I forgot what I was doing. Or I forgot how I was lining up. But anyways, yeah. So yeah, weekly 9 moving average. Back to the point is, if we can break up, I'm really looking for us to break above this, and I've been looking at this for a while. We've been testing it. The other day, it looks like we broke it. We weren't able to stay above it, but we still have 2 days and 11 hours to break this, stay above that. What I really want to see us do is close above this 9 moving average. The next week, do the same. Start getting that green candle, start forming a green candle and just pushing it to the upside a little bit. Or we could even retest it, get a little red candle and stay above it though. But stay above that nine moving average on the weekly, and then start pumping to the upside. I think this is a huge signal if we can break above that. That's one of the things that I'm really looking at. Let's also look at Bitcoin to Dogecoin, because that's another thing that I've been wanting to look at, but I keep on forgetting. It's because, I'm already kind of running long on this video. I kind of tried to cut it off a little while ago. But let's go to the Dogecoin to Bitcoin chart. I was looking at something like this downtrend over here. We did break that, and we kind of got some resistance up here. So I was like, I don't know if this, we already kind of broke this one over here. You know what I mean? We had resistance, giving us a downtrend. We broke it right here, going to the upside, and then we got resistance right here. Pretty much, and then the same thing, we got a nice little downtrend like that, broke it right here, and then it got some more resistance. So what I thought is, look, we have resistance, we got a little bit more resistance right there. It looks like we're in a sideways triangle pattern, something like that. If we could break that going to the upside, basically, I'm watching this trend, right? This resistance line. I think if we could break that, then that's going to be very bullish for Dogecoin. And maybe it kind of looks okay. So the other thing I was noticing is on Dogecoin, we had this two like run up kind of thing, and then we had that other. This is around that 209 cent. Like I said, this is Dogecoin to Bitcoin, so it's not the same thing, but it looks very similar. Basically, if this chart is going down, then you want to be in Bitcoin. If this chart is going up, then you want to be in Dogecoin. These little pops are very good for Dogecoin. And if we could get a little pop right here, that'll be good for Dogecoin. And maybe that little pop can send us back up to, because like I was saying, it kind of looks like the Dogecoin to USD chart. But maybe we get a pop up here. Maybe that'll send us to 202 up here or something like that. You know what I mean? Or maybe even more. I mean, look at what we've done in the past. Let's go to the weekly time frame and zoom out. Am I even on the right chart? No, this is the Coinbase chart. Do I have another one? Coinbase to. Anyways, yeah, let's just look it up real quick because. Sorry. Let's do Binance. They've had it on. They're like the OGs of. That's where I first bought. Dogecoin. But anyways, okay. Dogecoin to Bitcoin. If you're in. When it's going down, you want to be in Dogecoin. When it's going up, you want to be in Dogecoin. Sorry, did I say that right? Down Bitcoin, up Dogecoin. And look at this. Look at these huge runs that we've had in the past. Huge runs on Dogecoin. And we just had a little one right here. It was very nice too. Right now we're in this little downtrend. Let's see if we could break out of that and start, doing some of this. Maybe. I don't know. I'm curious if we could ever kind of do one of these again, like especially one of these. But I don't know. I think it can, especially if like Dogecoin is used on Twitter or it's. I think that would be definitely a good use case. But let's go back. I don't even really. I mean, Twitter's okay, but as long as it's being used for something somewhere big like that would be very cool. And Elon. So let's go back to Dogecoin and. Let's see where we're going right now. I think on the... Let's go ahead and delete that bigger daily falling wedge hypothetical pattern right now. What I'm really looking at is we bounced on that Fibonacci retracement level. We have, basically to summarize everything up, we're on the 4-hour time frame. This is what I'm looking at. We have resistance. Let's go ahead and draw a downtrend, something like that. And then in the meantime, we could probably even be watching these little trend lines and then just set up limit orders back. See, like right now, boom, it looks like we're already kind of breaking that trend line. We could probably sell and hit that limit order again. I'm going to let you go. Let me know what you guys think about the video. And if you like hanging out and watching charts, looking at the charts together, hit the subscribe button. And if you like the video, hit that thumbs up. If you wanted to watch the last video, click right here, and I'll see you in the next one.